Greetings, my fellow warriors. So, today we have another capitulation of short sellers. So, let's see what happened and why I think that is the case. First, in the last couple of days, they have been in a terrible panic. Just panic that you cannot imagine how much you can see by their comments in case that you're heavily involved in the stock like I am, you can see, like the moments when they start to panic. Even that guy, the RC Whelan, I say it's like a remote complaint whiner because they pay him to post the negative stuff. So even he posted on the account, and I saw that also some guys who were basically not regularly appear on the Twitter that do appear. And I think actually, like I was looking at that, and like they have the waves, like these like quiet, then they post something. It's quiet and then they post something. And I think it is the case that is happening because there is only like two people who are doing that, like, and they represent each other as something else with the different accounts, and so they impersonate themselves. I'm not sure why, because it's they have like small accounts. It's they're like they're not important. They want to create the idea that like there is more people who are interested in that stuff, like bashing the Fannie Mae Freddie Mac, or prompting the the preferred shares of the Fannie Mae and Freddie Mac. And when it is like, take a look at this. So right now, today, FNMAT fell down below $9, and for me that is a big deal. And the volume is terribly low, like 45,000. Let me explain you how small volume that is. The I think that this share have around, if I remember well, it is around 900 million shares, and for FNMAT, and today volume was 45,000. And it is so small volume that I personally, I had more before, but in the last batch that I sold, I had like 10,000. And I'm, let me clear up, I'm no one. I'm person of no interest who is like the guy who is like no one. And I had 20% of the daily volume. I had 20% of them. That was how my watch was holding. What I want to say, if some big, really big seller appears and want to sell, first they cannot sell it. Second, they will drive the price to the ground. So like now, it was like it fell below 9, and if somebody tries to sell that, they're gonna like 100,000. They will they will drive price to 6. So stay away from the preferred shares because they're not liquid. And like why they're not liquid, because nobody want to buy them. Like in the last 2 3 weeks, we had major event for the Fannie Mae and Freddie Mac, and that major event was listing at Robin Hood. It's not that it is like, yeah, we could trade before the shares, even preferred shares on in different brokers, but Robin Hood don't trade over the counter stocks, and it did trade. It started trading Fannie Mae and Freddie Mac, FNMAC and FNCC, our stocks for the common stocks. But what is important, even maybe more in that aspect of junior preferred shares, that they didn't and they do not trade preferred shares. So what does it mean? If that most probably means that if they take and trade on a New York Stock Exchange, and their common and Fannie Mae and Freddie Mac is listed at the New York Stock Exchange, that means that preferred shares will not be listed at per stock exchange. So it is like they'll probably leave them in some kind of limbo, and don't will not do anything about them. But also regarding our price, if we take a look, right now we are on 0%. I just It was like when I was preparing video, it was 617, and I was like, preparing to say basically the same stuff as I say now. When I open it, we did just jump. But what happened? Like if you look at the chart, and this is the price of the share, and if you look at the volume at certain amount of time at 159, 11:59. But look at this price. It is happening around exact time of the hour. That is happening in case of the liquidation of the short sellers. So if you're in a margin call and you don't have the money, they sell your stock, and that is happening at the certain amount of the time. Like for example, it happens at 11, 12, 1, 2. So it depends when it is happening. It doesn't happen at 11:30. It happens at 12, and they took and sell bunch of shares. So somebody of those guys who are owning and shorting the stock, they're sold out of the position in probably amount of the let's say 500, around 3 4 5 million dollars. And why we know that? In case that I want to buy the share, and I'm not the mind of they're much smarter than me, so I'm just a regular guy, and I want to buy, let's say in this case, let's say how much was share, what was the amount, let's say that was like approximately 500,000 shares, just for sake of the argument. If I want to buy that, I wouldn't do that in 15 minutes. I would buy 10,000 here, 10,000 there, 10,000, in order not to create the spike, because they start, buying at 623 and they push it in the 640. It's like in maybe 650. At the peak, what was 650. So that is the price, that is the difference of almost of 10%. If I'm buying the shares, I would buy in a small lots, and so in order not to create the situation that I need to pay the shares 10% more. But if I'm forced to sell, and if the bank take my shares and sell them fast, they would sell no matter what the price is. Market price 50,000 shares, market price 20,000 shares, bang bang bang, until the account is cleared. So this, what we see today and what we saw on a Friday, was pure liquidation of the short sellers. And so that is like really good for us, like, and in case that they're closing the position, in that case we would also not see these kind of spikes in so much volume at the same time. It would be dispersed in order not to create the situation that they need to pay the stock 10% extra. Like, you want to, it's okay to pay 1 2% extra, but to go from 6 25 into 650, it's not what they want. They had to sell them 10% more, and they lose the money. They lost the money, $20 million on a Friday. Today they lost $6 million. So up to now they lost $26 million, and maybe even more. But and to say, you and I, who are like owners of the Fannie Mae and Freddie Mac stocks, and we just didn't sell them. We lost zero shares because we didn't sell them, and they lost $26 million. So it is very bad for them, and they can manipulate the price, and you can see they prepare for liquidation. They decrease the price, so in order, when they need to cover, that they cover with the best prices. They have efficient program for that. But and you can see them, like on the website, on the Twitter, and it they are what they are. They're making they're pushing their agenda. They try to, like, do whatever they can in order to undermine the security and the people feel in this stock. But by it is useless, because it is happening, and it does happen, and let's see what our president
Before we came in here, you posted about Bill Pulte and that he'd be starting the job early. You said he's going to be downsizing the DNI. Can you talk about your
Well, yeah,
thinking
people
there?
have wanted that downsize for a long time. And many people don't want it at all.
Does that mean
A lot of people thought it was a
intelligence job?
duplication. Yeah, a lot of people thought it was a duplication. He's done a great job at Fannie Mae, and you take Freddie Mac, Fannie Mae, the value of that has increased so much since I've been in charge. I had the right to sell that, and in my first term, a group came to see me wanting to buy it, and they offered me exactly 10% of what it's worth today. And I didn't want to do it because I didn't want to look foolish when they flipped it a year later for hundreds of billions of dollars more. So I kept it. And I put him in charge as soon as I got here. And he's done an amazing job. Could be worth $1 trillion.
That's a pretty different portfolio, though.
Well, it is, I know. But, smart people are smart people.
Okay, so we have another confirmation of Trump that our companies are worth $1 trillion, and that means that it is like that's reality. Like in 3 days, he said three times the valuation of $1 trillion, maybe three. Give it the time. So, and what does it mean? In case that we have like 2 billion shares, and as much as we do have now for both companies, or in case that the warrants are executed, we'll have 10 billion shares. That means 1 trillion, that is 1,000 billion, divided with the number of the shares, which is like 2 billion or 10 billion, but let's say 2 billion, then the price of the share is $500. And in case that we have like 1,000 billion divide with 10 billion shares, the price is $100. And if that is not the value, I'm not sure what it is. And basically at the last, I said, like, I start talking about those uh, the guys who are like bashing the our shares, and they appear for time to time. And I think that there's it's like two three people, because if it is like a large amount of the people, you would always have the news, and they would appear, they would, you know but these, like, they have the spikes, and that is because only few people have they're like very vocative, but it is very few of them who are bashing the stock. And I think that they have different accounts. Like, for example, there is like, what is the guy who is very depressed guy, like he's, like, I think he's I think that the guy is completely in depression. The Molden Boker, no, Holden Boker, and he is, like, the poor guy, like, invested in a bad investment, and he saw that. Especially look at him now, like, okay, not look at the okay, we are kind of stable, and no volume the stock. Oh my god, it fell down below 9. This looks bad for them. And like, so they're just pathetic losers. Like, what to do with them? Like, let's, they try to do something, but the guy is said, like, and him, and there is like the guy who is Midas. I put some post that I posted what he said, actually, like, when the Fannie Mae and Freddie Mac was like 50 cents, we said went to zero, and we went like, now it's 10x, like, from that point. And he was actually suggesting that we invest in a so from that point, from when it was like 50 cents, we went 10x. So like, we have now more. So from 50 cents to 7, 6 7. So to 7 is 10, 14%, 14x. And in case that you follow his advice and invest in preferred shares, it would go. At that point it was like 3 4, and now it's 8. So it is like 3x. That is not bad, but compared to 14x, it's bad. And plus, it is not liquid. What to do? Look at this volume, 45,000. So stay away from that. And don't. I also saw that, I think that it is the same accounts that, I'm not sure, like, the guys who are like posting, like, those are the kids. Like, if what I noticed really, really important that Fannie Mae and Freddie Mac investors, who are us in the common shares, I think that I'm the one of the youngest guys in that group, and maybe there is like few more, but I'm way below the average age of the investor, and I'm 50. And I think that the average age of for the Fannie Mae and Freddie Mac investor is 60 or 70. So I'm young guy, but those guys who are like on that that Walker and the Midas and I'm not sure what are the other guys. They're very young compared to us. Probably for them, they think that they're very old, you know. But even my son think that he is very old, and he is not. But you know, so but compared to us, they're much lower age, and with low age, it comes less everything, and but and less understanding that Fannie Mae and Freddie Mac will be free again. So stay well, my friends. As I said, Trump third time in a week said that we are $1 trillion company. He is appointing his the most important asset he has to clean the DNI, and his most important asset is our guy Bill Pulte. And that also most probably means that Trump thinks and Pulte thinks that his job with Fannie Mae Freddie Mac is done. And why it is done? Because all is loaded, locked, and are ready to go, as Pulte said. So we just wait for the final moment and capitalization of our investment. So stay well.